Good morning. Welcome to Real Estate Radio Denver, the most important hour of radio every Saturday, right here on News Talk 710 KNUS. I'm your host, Tom Souther. Thank you so much for joining me. And as you know, Real Estate Radio Denver is dedicated to building Denver's real estate housing market. We're here to give you some great advice, help you with connecting with some true experts. And in the marketplace, whether you're buying a home, selling a home, refinancing, maybe you've got a credit issue, we're here to help you. Just give us a call on our off-air number, 720-515-1818. That's 720-515-1818, and we will put you together with that right professional. So in every market, there are solutions as well as just tremendous opportunities. You just need some trusted advice, and that's what you'll hear here every Saturday on News Talk 710 KNUS from 9 to 10 a.m. So this week, we've got a great show for you. We're going to do a little more focus on the mortgage industry. As you know, that's what I do. I'm a mortgage professional, and that's my passion. I love helping people get into that new home or saving hundreds of dollars on their mortgage. It's just very gratifying to make that happen for people. And I haven't talked a lot about this, but I moved my practice to Citywide Home Loans about 2 months ago. I'm very excited about it. It's been just a fantastic experience for me, and it's going to let me get to the next level of helping people that I want to achieve. So with that said, I've got three people with me today that I want to throw in. First, I'll start with one regular co-host and regular show partner, Tom Gysin, with owner and founder of Homestead Title. Tom, welcome back.
Thank you much, Tom.
It's almost a weekly, so we're good.
I haven't been here a couple weeks, so it's nice to be back.
Yeah, and you're going to I'm going to take a little vacation in July, so hopefully you're going to cover up for me. I don't know if you saw that message, but
I did not.
It'll be an opportunity
we'll figure that out
to exceed expectations.
Always.
All right. I also have with me two additional Citywide Home Loan folks. I have Gavin Ekstrom, who is our title is Senior Area Manager, but he's responsible for all loan operations and production sales within this marketplace, and he's my immediate boss, for lack of a better term. And Gavin, welcome to the show.
Glad to be here. Thank you for the opportunity.
And you're responsible for just a huge amount of business for Citywide Home Loans. We're a large company, and you've got a big chunk of that.
Yeah, we're growing. We did $420 million last year, and on pace to beat that record this year.
That's awesome.
So it's a great market here in Colorado, and we are excited to be a part of it.
Yeah, and a huge portion of that citywide total business. It's pretty fantastic. And our third guest, our operations manager for Citywide Home Loans, I have Jasmine Brown with us. Jasmine, thank you so much.
Thanks, Tom. It's a pleasure to be here.
Yeah, and you're an old radio professional.
I had my days.
That's good. So this is old hat for you, and I'm happy to have you here.
It's been a while, but yes, back in the day.
You're going to throw in some perspective on what's going on behind the scenes for folks that I think is really valuable.
We'll definitely talk about the awesomeness that is known as operations in the mortgage industry.
Oh my goodness, it's
awesomeness.
It is a interesting some kind of exam that we put everybody through that we're gonna help people to understand a little bit better. But
it's an exciting realm.
Yeah, it's a little different than it used to be for sure. I thought we'd start because we've had such a nutty week in the market, in the financial marketplace, and usually I don't spend an awful lot of time here, but I just wanted to throw out some statistics and give people an idea what happened this week that just is pushing rates higher, a little higher than they were. We had I know Gavin and I both struggled with some loans, as everybody in our office probably has, with rates have gone up a good half a point easily in the last 3 weeks. And then this week, Wednesday and Thursday, the market, just on the Fed's announcements and their monthly chat, drove the market even farther. It was horrible.
There's a ride at Elitch Gardens called the Mind Eraser, and that was really what the last 3.5 weeks have been like. It's just right as it plateaus, and again you go down another loop and a turn, and it's gut-wrenching to your stomach as well. And I can only imagine on the other side of the fence how the consumers feel, because they don't know what's going on and can't put their pulse on it either.
Right. And they're trying to get good advice from us and from everybody, and we don't have that crystal ball either, which is sad. I locked a bunch of loans yesterday morning just thinking, Ben Bernanke just might pop something not very smart for the market out of his mouth, and that happened. And we had one of the worst days as far as the market going for what we do. Mortgage-backed securities dropped 162 basis points, which is huge. It's probably, a quarter or more in rate.
Yeah,
easily.
Yeah, we saw a quarter to 3/8 of a change in price for the consumer. Lock and go. When you're at application, to those consumers out looking to make application, lock at the time of that application. Do not leave your loan officer's desk without something in writing saying that you are locked in. You need some guarantee in writing from the bank or mortgage company letting you know that you are officially locked. Lock and go is the term that we use in our office. You see it in the emails that I send out, and it's just so important right now to not play the market. It's not a market to be playing in.
Right. I'd like to say that I can predict that we're going to have a little bounce back and rates are going to come back down a little bit. But man, it could just as easily go the other way, and taking that risk is not the smart way to go.
Absolutely. And
we had huge Dow drops. Some 400 points on Wednesday and 200 plus Thursday morning. We'll see where all this shakes out. But it's been just a crazy ride this week, as it's been for the last. We had another drop like this about 3 weeks ago, and a lot of people were expecting a little bit of a bounce back in rates, and now we get another little tumble.
It's interesting though. We were at 3 1/4, and right now. We are averaging four in the fours.
Right.
Was that 4 1/4?
Well,
I know you can't quote rate, but is it the low side of 4?
Yeah,
right?
Below 4.5, right? So we're teetering between 4 and 4.5%. That's a great rate.
That's an incredible rate.
That is an
incredible rate.
I'm listening to us talk, and it's like it sounds like doom and gloom.
I know,
but guys,
it's not.
We are in such a great market, and our inventory is low, and so we've got good things going for us. But
it goes fast. So you're listening to Real Estate Radio Denver here on News Talk 710 KNUS. We're going to be right back. We're going to have lots of information on how to survive this loan environment and get your loan done. Can't wait to give you this information. Come right back. Welcome back to Real Estate Radio Denver. I'm your host, Tom Souther, and we've just got a great show for you today. We're going to fill you in on what's going on with your mortgage and how to get through that process, and what does it mean? What do these rising rates mean, and the pricing that's going up? Denver's one of the hottest markets in the country. I just pulled out a magazine article today with one of those magazines that is very popular in Denver. I'm going to leave their name out of it. And its headline is Denver's Red Hot Real Estate Market, and they're talking about neighborhoods and how much they've all gone up and what the great news is. And this is a fantastic article, and it would have been great to have a year ago. So, I kind of laugh at some of these things. That's why you listen to Real Estate Radio Denver, because we've been telling you this for a year. And now we have our proof. It's in this magazine, and it's fantastic news for everybody. But you haven't missed the boat. But now's the time, I
Absolutely.
think. So I've got with me three great people. I have Tom Gysin, the owner-founder of Homestead Title. I have Gavin Ekstrom, our area manager at Citywide Home Loans, and I have Jasmine Brown, our operations manager at Citywide Home Loans as well. And we were talking about rates and what happened, and I want to throw in, we wanted to talk a little bit about the volatility of the market, how much inventory is going on right now. We talk about this with real estate agents almost every week. But I think it's worth spending a little bit of time is how it reflects or relates to that mortgage you have and what it's doing. So I know, Gavin, you've had some experiences where this inventory is so low, there's so little on the market. How's that affecting your customers?
Well, when did that happen? When did it become a seller's market? It seemed like almost overnight. It teetered, when inventory dips below 2%.
2 months worth of inventory.
2 months worth of inventory, exactly. Then that's when you start to see it become a seller's market. Now we're on average, about 1.5, 1.25?
Yep.
And it's definitely a seller's market. So for home buyers looking to purchase, no longer are they able to get closing costs paid. No longer are they able to even negotiate 1% to 2% off of the purchase price, which hurts the first-time home buyer, which is that market is really what's fueling our housing economy.
Right.
Yeah, it's obviously it's a tough road for them because all the stories you're hearing is just how many people are writing contract after contract and showing house after house, and by the time they get back to their office, there's 7 offers on a property, and it was all for waste.
The other question that I have is, where's all this cash coming from?
That's what's amazing, because those are the offers that are really high priority to listing agents, the agents who are selling the homes. Is, they want the one with the most cash because that's most likely the one that's going to close.
Right. Cash offers don't have to get an appraisal. They don't have to go through the loan process. But
or even large down payments are certainly a better offer for a listing agent and a seller. But I think great agents are using a lot of tools in figuring out what's the right thing to offer, because sometimes it's not price, and sometimes it's terms, or it's when you can close, or there's a lot of different things. Sometimes it's a longer close.
Sure.
I think a lot of agents out there as well are just more educated within our industry, and so they'll go ahead and take the pre-qual letter that has somebody who is fully approved, or has, if they just know some of the logistics behind some of those borrowers, I think that they're more prone to go ahead and advise their clients to take those offers, even if there's higher or the cash. Anyone's going to take a cash offer, but I think more education in the industry. So
the other trendy topic that is happening in our market is now they're offering more than what asking price is. And all that's going to do is, once those transactions start to close, is it's going to drive up our values.
Yeah, absolutely.
And again, a combination of rate and the market increasing together is only going to make it more and more difficult for that first-time home buyer to get into the marketplace.
Well, it also puts a lot of pressure on us as the lender to go ahead and make sure that we meet the deadlines and the dates. When you have backup offers, there's a lot of pressure to make sure that everybody pulls through with those contract deadlines. So,
well, you talked a little bit about a 21-day close, right? And I can tell you from experience, there's not a lot of lenders out there that can do 21-day closes, right? Yeah. Sounds like that's something that your organization can offer, but to the importance of structuring that offer on the when it's at contract time, that's what's happening, right? They've got to talk to those other agents, and they've got to figure out, does your seller want to get out now? Do they want to get out in 6 months? And if you write an offer of 60 days when they want to get out now, chances are you're not going to be accepted, right?
Correct.
But there are a lot of lenders out there that are still running 45 to 60 days on closing times.
Absolutely.
Yeah, the pressure's on Jasmine to get us to a 21-day close. I don't know how that happens, but she's working on it.
Well, I think
it's where the market's going.
Well, I think we know how that happens, Gavin. You and I both know exactly how that happens. We do a lot of work up front and have that file in perfect shape before the contract's written.
That's right.
So, as a borrower, as someone coming in to buy a home and get that home loan, there's some pressure on you to make sure that we have all that information that we've asked you for, and we'll get into those do's and don'ts and what that crazy list of documentation looks like. But doing that all in advance and not telling your loan professional, well, I'll get you that in a week, or I'll get you that 2 weeks. Have it before. Get all the information I ask from you before that contract's written. Then we can close in 3 weeks.
Absolutely. It's not hey, try and bring this documentation in when we meet or when you do your online application. It's, we need this, and here's your laundry list of documentation. Every bit of it is necessary, unfortunately, for us to get through the loan process, and we need their help as well. The sense of urgency is now bigger than ever before, and for us to get to that 21-day close, you hit it right on the head. Yeah. Is you bring that information up front, we can make that happen. The benefit to that is, for the consumer, is now they can go out and be negotiating on a home, and if I've got 2 pre-qualification letters and mine says we can close in 21 days or less, and this one says, hey, we're 30 to 45 days, I'm locking this one up.
Absolutely.
And that might even be an offer that's $5,000 to $10,000 less, but knowing that they can get it done, maybe they have to head out of town, maybe wife and kids have already been transferred. There's a lot of different nuances that come into it, but we've seen it happen.
Yeah. Well, it's amazing that, I love the story of, can you close the loan or not? I had one just yesterday, and there's this old joke about the customer walking into the grocery store and asking the grocer for what his price is on eggs, and he says, well, they're $2 a dozen. And the customer says, well, across the street, they're only 25 cents a dozen. And the grocer says, well, go across the street and buy them. And he says, well, they're out. And he says, well, yeah, I always sell my eggs at 25 a dozen when I don't have any. And it's the same thing. I had a deal yesterday with a pre-approval with another lender, and this was a complicated deal. And I was fairly confident that they couldn't get that loan done, and they were undercutting us in rate because we had to send it to a specific place, and their price is what their price is. And I just told the customer, you go back and ask them these specific questions. And they came back and said, no, I can't close that loan. So it didn't matter that their price was so low. It matters, can you get my loan closed? And that's where you need a true professional in this business.
Yeah. Well, we were talking off air a little bit about just some of the stories of people with the recent rise in rates that have now lost out, right? Because they no longer qualify. And to your point about getting your documentation in early and getting approved, right?
Yeah, getting approved.
So you're locked. You're ready to go.
Yeah, and this isn't all bad news. Tom, you were talking about your friend who is going to get his home refinanced that hasn't been able to do it because the values weren't there.
Yeah.
So the good news in this marketplace is if you're sitting there with a rate at X, I don't know what that is, anything over, say, 4.5.
Right.
Maybe that number is slightly higher than that today, but and you've been holding off because you didn't think you had value. Now's the time to call.
Yeah, this gentleman
you may have value now.
This gentleman is at 7%, and he's been in the business before. He's no longer in the industry, but he's watched this and he's just been underwater and hasn't been able to get the loan. And good for him. He's checking Zillow and other sites to kind of get an estimate. Let's call it right, or a zestimate,
which is worth a lot.
Yeah, and that may not be. So of course he's got to you got to do some other research and obviously do an appraisal. But if that equity's there and he can get a loan, he's going to be thrilled if it's at 4.5 or 4 1/8 or whatever
versus
that is.
7, absolutely. Yeah. I've got a number of those going on right now that are at 7. Seconds at 10% and above that we're able to get done now because values are better.
Yeah, I would actually think that'll sort of be the next wave of refinances that people see is the people that have equity now.
So
that's a great point. That's a great point, and you're exactly right there. That's a home run. Good job.
So, and the great solution to that is you need to give us a call. Let us help you. I'll put you together with either myself or with Gavin, and you can reach the show off air. Leave us a detailed message, and we'll get right back to you. That number is 720-515-1818. Again, 720-515-1818. We would love to help you. I can also push you to Gavin's website. It's 303MTG, 303mortgage.com, or mine, tomsouther.com. And we would love to help you and help you to really determine, do you have value? What's the right move for you? So that's what we do every day. Mm-hmm. So I thought I would throw out my story of my borrower. As rates go up, sometimes that waiting game doesn't work. I have a borrower who is his income is going up, and he keeps wanting to get approved for more home. And I said he was approved several months ago at a $150,000 home, and his income is climbing up. But as rates go up, even with his income going up and the rates going up, he's still at the same place. So he hasn't bought himself anything, and the home prices are higher. Mm-hmm. So playing that waiting game doesn't necessarily work in this environment, and I don't think that rates are going down. I wouldn't count on it.
Well, the other part about that,
world-class rates is make it happen. We're
seeing such appreciation in the housing values.
That's right.
So I think we talked about this story a few months ago. But someone who had sort of kind of been trying to lowball an offer for a few months, and before she knew it, prices had risen $27,000 or whatever is on that house just in those areas because because so many people are getting multiple offers on their properties right now. The appraisals are actually coming in fairly regularly. Wouldn't you agree with that?
They're starting to, because we're starting to see a lot of those transactions closing. So we're starting to see that those appraisals come up, which is really nice. Banks are not They realize what's going on. So banks on short sales, are there any short sales anymore? I mean,
there are. There actually
a lot.
It's gone way down.
There are, but there's always going to be short sales.
I think there also just depends on the market though too, which market you're at.
But they're not a lot of them, and like there were flooded with short sales.
90 days, every contract was a short sell, and now it's like
they're
gone
here and there.
Okay.
Yeah, but to the point is, I mean, some of these offers are not coming in $5,000 over; they're coming in $30,000 over.
Yeah,
and you know the problem is sort of the cart or the chicken and the egg, I guess, is what it is. It's like, you know, how does an appraiser justify that comp if there's not another comp, right? But what they're seeing is when they're getting 6, 7, 8 offers on a property that are all $15,000, $20,000, $30,000 over the asking price, they're starting to say, you know what, the market is dictating that. And then to your point, Gavin, some of those are cash offers that will set the bar.
That's just it. The cash offers are setting the bar. And then also, you know, if you're, I've got one right now that they're buying the house at $450. It appraised at $425. They've got to come in with that $25,000, and in addition to putting their down payment, and they're doing it. So that starts to set the bar for that neighborhood,
right? And
then you get 2, 3 more, and then all of a sudden that price is, and I wouldn't even say it's artificially gone up. It's gone up. That's the market. That's the bar.
It's the market. But to your point, you just said something very interesting right there. On the other side of that spectrum is they offered $450. But it came in at $425, right? So, you know, it's a game. It's very hard right now to figure out what's true.
90 days ago, that buyer would have went back to the seller and said, sorry, renegotiate. This time, this particular seller said, sorry, I've got 6 more offers.
Bring $25,000.
Yeah.
Get your checkbook out.
Yeah,
and that's why those offers with more cash are winning those bids, which is unfortunate for the first-time home buyer. You're listening to Real Estate Radio Denver here on News Talk 710 KNUS. We're going to be right back, and we're really going to hit the do's and don'ts of that mortgage process. Come on back. Welcome back to Real Estate Radio Denver. I'm your host, Tom Souther, and I have my 3 fantastic guests with me today. We're talking about what's going on in the mortgage industry and how just crazy it is and the differences. We're going to get into some of the differences, I think, in what your experience was 3, 4, 5 years ago. 5 or 6, 7 years ago, really. It seems like it's gone faster than it did. Or maybe the opposite of that. Whatever. It doesn't seem like it's been that long, but it's been a while that we've really been in this kind of crazy lending world. So anyway, let me reintroduce my guests. I have Jasmine Brown, our Citywide Operations Manager. Welcome.
Thank you.
And Gavin Ekstrom, our Senior Area Manager. Gavin's responsible for the Denver loan process and production, and he runs our several offices here in Denver. And I also have with us Tom Gysin, the owner-founder of Homestead Title, one of my regular show partners, and very honored to have his company's involvement in the show. They do a fantastic job for all of my customers.
Yeah, we love it. Thanks.
So I wanted to remind you, you can always reach us. I'd love to get you together with either myself or Gavin at 720-515-1818. Leave me a detailed message or send me a text. That's easy. Just shoot me a text saying, hey, give me a call. I'd love to chat. That number again, 720-515-1818, and we'll get back to you as quick as we can. We were talking about just some of the crazy stuff that's going on in this industry, and I wanted to get back to some of the do's and don'ts and how do you make our process fly. And let's head there, and we'll go to the expert here, Jasmine, who knows all of these things that drive her department crazy because she's responsible for underwriting, processing, all of that stuff that happens to your loan file after you talk to somebody like Gavin or myself.
So after you go ahead and get pre-qualified for a loan, that is absolutely, I must add, the first due that you as a consumer, as a home buyer, can go ahead.
That early.
That's the first thing you can do for yourself, is get pre-qualified first, then go look for the home. It's one of those things where you just don't want to go out and find the house of your dreams and then do the legwork after. So the first part of our due is get pre-qualified.
Most agents will not put you in their car unless you've talked to somebody like me.
It's important.
Or Gavin.
So go ahead and see Gavin or Tom first, and that's the first due on our list. The second and the most important thing I think that you could do as a consumer to go ahead and facilitate the process and just really make sure that we can get that transaction closed on time is do get your documentation in. When you show up to Gavin or when you show up and meet someone like a Tom or your mortgage professional, we need to make sure that you have income and assets. By the end of this transaction, we're going to ask for it all. We're going to know the name of your firstborn. We're going to have your blood type. We're going to ask for, just literally a history of your portfolio for the last couple of months.
I'm typically asking for like a hair sample or some kind of DNA.
I think that's about accurate.
We're about there.
It's no longer tax returns, bank statements, and pay stubs.
It's a handshake is no longer going to do it. It's even if you have good credit, it's one of those things that's one of the biggest questions that we get. But I have excellent credit, so why do I need to provide all this?
Self-employed. You're not just going to believe me?
Self-employed. It's just due to the industry, just the regulations that we have in place now. We're going to document every little facet of the loan transaction and your life at when you apply. So it's just super important to make sure that you get your documentation submitted up front. When you say you'll get to it, or we're all guilty of it. I'm guilty as well, but it's too easy to go ahead and say I'll do that tomorrow or the next day, but it really will delay the process. Today's market, it's hot. So it's important.
I have one thing that always sticks in my mind is, and I hear this from people all the time, and they're like, I can't believe that they needed an explanation for a $30 deposit in my checking account, right? An undocumented $30 whatever it is.
I'm glad you touched on that because that's going to be one of the things on our don't list. But yes, the do list is making sure to go ahead and if the lender goes ahead and asks for something, it's important to do supply that. It's even if you don't understand it, if you don't agree with it, it's just important to make sure to get that in. And yes, we will ask for crazy things, a letter of explanation for this or a letter of explanation.
Something's that simple. You will ask for a letter of explanation.
You might have had an address on your credit report that reflected from your college years back in the dorm. I mean, that is something that is actual. I mean, if it's on your credit report and if it doesn't really jive with the application that you've supplied, we're going to have to ask for it. So, and
is the reason for that Citywide or whatever lender that is scared of a buyback because it's just it wasn't dotted or crossed, IT crossed.
That's a valid statement. We just need to make sure that if there's a question mark within the file, that we've inevitably gone ahead and followed through with it, that we've addressed it, even if it's not truly relevant to the credit profile that we're approving right now. We just need to make sure that yes, every I is dotted, every T is crossed, and that it's been addressed.
Yeah, because the investors, etc. The reps and warrants are sort of like all on you, right?
That's
it's kind of like anything's wrong, it's coming back to you.
And the loan's got to be purchasable. At the end of the day, we want to make sure that we can sell that asset to the bank and then free up our money so we can go lend more to.
The next guy.
Yeah, and that's not unique to Citywide. Even if you're going to one of those big, huge banks that we won't mention, you think your loan is going to sit there forever, but there's just as good a likelihood that they're going to sell off a bundle of loans at some point. And if they do that, they have to have all that due diligence done as well. So we're not making up these rules.
Yeah.
Everybody's kind of in the same boat.
Everybody's in the same boat. Yeah. We're all governed by the same agencies.
And we're being cautious. And it's good that I think lenders are actually making sure that people have a reasonable ability to pay that loan back.
I had someone ask me the other day just a general question, which was, do you think it's easier, the process, and when I say just easier, maybe getting a loan and have some of the guidelines loosened in the last year from 3 or 4 years ago? How would you answer that?
Oh, I think it's easier. I think the documentation is still a big requirement. But it has loosened up.
I think so. I think that we're definitely seeing more products come back out, more of a conventional side. I think that there's a bigger array of products again. At some point in time, at one point they just went away.
But jumbos were gone.
We're starting to see them come back. We're starting to see the construction loans take off and the takeout. So I mean, lending money is flowing. So that's coming.
The other thing too is Wall Street's getting an appetite for the mortgage industry. 3 years ago, if you said mortgage to Wall Street, they turned a cheek. Now you've got these money managers looking at mortgage companies and saying, hey, that might be a good opportunity to get involved with that company.
And I think that's a large part because of this activity that we're doing up front. These loans are much higher quality than they were 5 or 6 years ago. And, they know what they're buying. I think that was a big part of the whole mortgage failure was there were so many packages of loans that were sold that they had no idea what they were getting.
Yeah, the rating. Yeah, right. Great point.
So now they're with the process that everybody has to go through in the loan world. they're fairly confident in what they're buying.
Mm-hmm.
They know what those credit scores are. They know that the income's been verified. They know what assets were in the file, and those are all important. But I think if we go back to, is this harder or easier? I think a lot of that is in the hands of that loan expert. And I know our process at Citywide is we will get a lot of information from you up front because that makes your process easier. It's much, much harder to get nickeled and dimed all the way through your process. Mm-hmm. And I'm not saying we'll never ask you for another piece of information, but if we have a really good idea and understanding of your file early on and ask you for most of those things up front, much less stressful than 4 days before closing.
The common complaint that a consumer has is, I already got you that. Or I got to get you more and more and more. And in reality, if they utilize the list, if the LO does a very thorough list, they've asked for it up front. A lot of times the consumer may bypass it, or if it says 1 of 4 on a bank statement and 4 pages and we get just the front 2 pages, or on the tax returns, hey, I got you my 1040. Well, you have 6 schedules outside of that. And for us to calculate income, we need to bring all those schedules in. And so that part's tough. As far as the $30, I don't know, it would have to be income related. So somebody, if we had to identify a $30 deposit, they were making a lower income.
Okay.
If that person was making, $5,000-$6,000 a month and there was a $30, we wouldn't ask for it. But if there was a $1,500, we certainly would.
Okay. Situation.
But let's just say that we have 10 deposits of $30. So even though it's a $30 here, $30 there, it's just the aggregate that we look at. Is there a trend? Is there a pattern? Is there? There's so many questions behind it. There's so many details, and sometimes we don't even know the whys. That's the what's and whys. But it's an investor regulation, so that is what we ask for.
That's what you got to do.
That's what we got to do.
Well, these are some great do's. We're gonna come back with some don'ts.
Yes, we've got the don'ts.
Yeah, there's plenty of don'ts, and there's lots of great stories there. So you're, again, listening to Real Estate Radio Denver here on News Talk 710 KNUS. I want to encourage you, give us a call, 720-515-1818. Again, 720-515-1818. We'll be right back. Welcome back to Real Estate Radio Denver. We are telling you about the loan process and some of the do's and don'ts. And gosh, we had some great do's. Get your paperwork in early. Get that relationship built with your loan professional. Find a good one, and maybe that's not me for you. I care. I would love to do your loan, and Gavin would love to do your loan, but find a really good one, because there's some good ones and there's some less, and I think we're good ones. And
I know we're good ones, Tom.
I know we are. And they will make that process easy for you. I get this comment a lot from my customers, not everyone, unfortunately, because some deals just go in directions you don't expect them to go. But I get it consistently from my customers that, wow, this was really easy. Mm-hmm. You got everything up front, and you ask me maybe for a couple things at the end. And I always tell people, we're going to come back, and there's going to be something that comes up in your file. And we're going to ask you for something that you just shake your head at, but that's just the way it is. Anyway, let me reintroduce everybody. I have Jasmine Brown, our operations manager from Citywide Home Loans. I have Gavin Ekstrom, our regional manager with Citywide Home Loans, and I have Tom Gysin with Homestead Title. And gosh, Tom, we had a story that you wanted to tell about Homestead. Do we want to throw that in?
Let's get to that. Let's get to that in a little while. Yeah.
Okay.
Yeah.
Cool. I always like to give Tom a little plug because his company does such a fantastic job.
We use them as well, and I can't say enough good things about Tom and his team over there. And you guys have grown to become a little bigger title company too.
Yeah, I'd like to. I'm always impressed with our growth until I look at your growth. So it's, but yes, we have grown quite a bit, and it's been fun to watch it happen. Really, one deal at a time, and that's, I'm sure, no different in your world.
Mm-hmm.
Well, do we have any other do's that we want to throw in here?
Yes.
Things that really will help you in this process.
I think one of the biggest do's that I have to offer is do ask questions. This is, I think Gavin was indicating, this is one of the biggest purchases of your life. It's important to make sure that you feel comfortable in the transaction. It's important to make sure that you walk away from the closing table or walk away from this deal knowing that you have all answers satisfied and that you know what you're getting yourself into. So I think it's really important to just ask questions. The internet is such a great point of reference this day and age. So if maybe it's midnight or maybe your loan officer isn't available at that time, then you can just go ahead and make sure to get those answered. So that is my final do that I have. So I think we'll now go to the best part of the loan transaction.
The funny don'ts.
Dun, dun,
This
dun.
is the
The
don't.
great stories. I love these.
This is the loan don'ts, and I think it's a pretty important topic. This day and age, we want your loan to close. You want your loan to close. The don'ts, the number one don't that I can reiterate again is don't delay. Don't wait. Get your documentation in. If there's something that is asked, I know it's in my nature. I just want to fight everything. I want to argue things, but I can tell you that's a don't. Don't argue. Don't wait. It's just too important right now. Where there's offers on the table, as we were talking about earlier, and everything has a deadline. Everything has a date. So that's a big one. The next one. This is going to sound very interesting, but to any homeowner currently going through, or any first-time homebuyer currently going through the transaction, transferring funds. I have to tell you that this is literally going to be the demise of my career. Is explaining the transfer of funds to a loan officer sometimes, or even a client. Banks and investors just don't want to see a borrower transfer funds back and forth or have large deposits that we can't document. So we're going back to the question of what is considered a large deposit.
Well, if I've got $50,000 in the bank, what does it matter where it came from?
Well, it matters that we have the money seasoned. It matters that as an underwriter, as an investor, we're going to look at the fact that you, as a borrower or as a homeowner, are required to have a certain percentage of your own funds into the transaction. We need to make sure that those funds are seasoned, and we need to make sure that they're yours. So when we see a miraculous large deposit of
right, is it a gift? Is
$10,000? It's like, where did that come from?
Yep.
Mm-hmm.
So those large deposits and transferring of funds, I can tell you, it has to be documented. We have to know where they came from. If you have money under your mattress at home, that's not going to work. It just won't. It's just
let us know. Let your loan professional understand where that money's coming from, so that we can work out a solution for that question. If it shows up right before closing, we all have a lot of stress.
I can attest to that. I think if you indicate as a homeowner, or if you're in the process that your down payment is going to come from your checking account, we have to make sure it comes from that checking account that we have verified, that we have in the file. So I have to tell you that the down payment, the funds, the transferring, the deposits, just make sure that you can adequately document and explain, because not only will we have to verify where it came from, but we're going to have to know the what's and the whys.
How long would it need to be seasoned?
Seasoned, technically speaking, a new account for example, if you were to open up a new savings account today, that needs to be open for 60 days. So it really depends on the product. So it could be anywhere from 30 to 60 days, but 60 days is a rule of thumb.
Great.
Right.
What other don'ts do you have for us?
Don't take out new debt.
Yeah, I just had a deal last week, 2 days before closing. Buyer calls me, and I hope she's not listening because she's going to yell at me, but you won't know who she is. Is it okay if I charge $12,000 worth of appliances?
For my new home, right?
For my new home.
Right.
Yeah, today.
It's going in the new house.
And I'm just like, ugh,
Yeah.
no,
Yeah.
don't. I mean, there may be some ways you can make that happen, but don't. Just don't.
It's just better,
don't
even if
open
you
new
do
credit.
qualify, just not to do it. The sales, like I mentioned earlier, the sales are going to be there after you close.
Right.
The great deals will still be available. If you want a new washer and dryer for your apartment, fine. Go buy it now and
buy it
cause the problems to not be able to close.
Close on Friday, buy on Saturday.
Yeah,
even, even if it's one of those things, we're in operations, we don't want to have to ask you for anything more than you want to provide. I assure you, it makes my job tougher, my life harder when I have to go back to a client and indicate that I'm going to need another bank statement or a copy of a note if you went out and bought a new car. I mean, the fact is that even if you take out the new debt, even if you qualify, now we just have to document all over again. We're going to have to start the process. Yeah. So it will just alleviate some of the hardships when you're purchasing a home if you just wait.
What about co-signing? Does that new debt? If I'm co-signing for my daughter to get a car, she's going to make the payment. I'm just going to sign on the line. And
unfortunately, Gavin, that's going to be considered as new debt, and we will document.
Yeah,
and it may push you out of qualifying.
It could.
And you're going to know this stuff because, as I asked you off air, you rerun credit right before closing.
Sometimes we get individuals who ask us if, hey, well, what if I were to go ahead and just do it the day before closing? You'll never. And it's one of those things that it's difficult. We will know. We will be repulling credit right before you close. And there's no guarantee that even later on, even after the loan closes, I try to indicate to some people that we might still have to ask you for documentation after the loan closes. So it's one of those that don't go and rack that up just the day after. You just never know.
So be patient.
Be patient.
Right. Buy it afterward.
Yep. Paying cash.
Right.
Yeah.
There's that.
What else you got?
Yeah.
Some of the don'ts in when purchasing a home is don't not listen to your realtor. Get an inspection, or
good.
listen to your realtor, but just don't ignore your gut. I have to tell you, get a home inspection. Make sure to get a copy of your appraisal. So don't ignore that. What other kind of don'ts do you have?
I can't emphasize that inspection thing. Everything seems to be moving so fast in this marketplace, and you're competing for offers, and maybe that home that looks too good to be true, that's failed a couple times to buy, has an issue that you need to find out about. So get that inspection. If you don't have a good inspector, call the show 720-515-1818 and I'll fix you up with somebody. But that's so critical. One
thing I was going to mention is don't trust somebody who hasn't been doing this for a while.
Yeah, that's a big one.
This industry has, like you guys have mentioned, has changed a ton, right? And I've seen people that it hasn't been recent, but I can think of one in particular. Kate got in the industry a couple years ago, and I just remember his head spinning, going, this is completely different from what it was, because he was in it like 10 years prior. Yeah. And he's like, I don't even know where to start. Right. And so, Tom, I can vouch. I know one of the reasons you made a move, you made a comment to me one time is that Citywide was getting loans done that other people, weren't getting done, right? And that's an experience factor, right? And Gavin, maybe you can attest to this. What's the average experience level of your loan officers?
Oh, I think in our office in the DTC, we're probably 16 years average experience, and then I think in the state we're probably right around 10 to 15 in that time frame. I've been doing it 20 years. This is all I know. Started at a young age of 19, and here I am today. The one thing, it's interesting, when we interview people and we're looking at their resume and we see that they got out of the market in 2006 and now they're wanting to get back in.
It's a red flag.
That's a big red flag, because what they learned in 06 isn't the same today. So one more don't is don't give notice on your employment, and do not quit your job, even if it's for more money. And I had a client who said, "Well, I quit my job because I'm making more money, but they don't want me to start until August." Well, your closing is July, so where's the income?
You're not working.
There's a gap.
Now.
There's going to be a gap. So when you get that job in August, then the problem there is, when I locked her rate, it was 30 days because that was the time frame that it was going to work for her closing. Now we've got to extend that out, and that comes at a cost, unfortunately, to the consumer, to keep that rate going. So, Tom, you have a complete list of the do's and don'ts. Why don't you tell listeners where they can get that?
Yeah, we will. We would love to send that to you. Just text me do's and don'ts to our off-air number 720-515-1818, and we will get that out to you, or call and leave us a message 720-515-1818, and we'll get you this list. And none of this is rocket science, for gosh sake. It just takes a little bit of pre-thought and pre-planning, and we'll make that process easy for you. It's not that hard.
But go to the experienced guys, the professionals.
Yeah, I've got to say that's just so critical on the real estate agent side, and on our side, man. You don't want to have that person who's been in the business for 3 weeks. It doesn't pay out.
Maybe that's a good segue. I'll tell a quick title story that from an inexperienced thing that happened, and it was a buddy of mine. Long story short, he built a duplex, intended to sell one side of the duplex, did get a buyer for that, went to a title company, was not Homestead Title, let me tell you that, and they unfortunately, when they prepared the warranty deed, the legal description on the warranty deed read for both sides. Okay, so he accidentally conveyed both sides of the property to this buyer, and you know what? He could have, certainly
got a 2-for-1 deal.
Yeah, kind of a 2-for-1.
Nice.
And the nice part of this is he went to this guy after he realized this about a year later, and the guy said, "Oh, no problem," and he signed a quitclaim deed back for half of it.
I'll sell it back to you for.
So, Tom, just so everybody knows, these deeds are actually the documents that are recorded with the county that transfer ownership.
Right. And so he went to that guy, and he got it back, and so he thought all was fine and dandy. Well, the issue came when the guy who bought that other half went into foreclosure. And so the deed of trust that had been executed at the closing comprised of both sides. And so, of course, now Chase is foreclosing on both sides of the property. And try getting a hold of Chase to explain that to somebody, right? He tried and tried and tried and tried. And where did he get? Nowhere, right? And so at the end of the day, I ended up having to refer him to a very good local attorney here who had to file an injunction with Chase to get them to just listen. And they had to go through the process of basically stopping the foreclosure and releasing that side of the deed of trust and preparing a deed of trust for the other side. And it probably cost him $5,000 in attorney's fees and 2 years, probably not 2 years, probably a couple years of some major headaches.
It's incredible, these stories that are out there, the things that can make your deal fail. I want to thank you for listening to Real Estate Radio Denver here on News Talk 710 KNUS. Great show on what's going on in the mortgage industry. We wanted to get to some products, and we'll do that in an upcoming show. But I want to thank Gavin and Jasmine and Tom with Homestead Title for all coming in. It's a great show, and we will see you next week. Thanks so much.